If you had invested $100,000 in Tesla 2 years ago, it would have grown more than tenfold to $1.2 million today. If you weren't one of the early investors, you might be asking if it's too late to invest in the electric vehicle pioneer. A Tesla expert has revealed that it's not too late. Now is the best time to buy Tesla. Is buying the stock still a good idea? The majority of investors and analysts believe that Tesla will continue to increase its vehicle deliveries, which means that the company is well on its path to becoming one of the world's largest automakers. Why is now the best time to buy Tesla stock? What does the future of the brand look like? Let's find out. Tesla was the first electric car manufacturer to go public in 2010 using the NASDAQ platform. Tesla priced its shares at $17 per share using its initial public offering campaign, valuing the company at around $2 billion. Tesla has since initiated a 5-for-1 stock split carried out in 2020. As a result, its original IPO price should be considered around $3.80 per share. If you had invested in Tesla's IPO back in 2011, you would have made a hefty profit. Tesla has subsequently gone to become one of the best performing stocks of all time, as we all know. While some experts say the company is expensive because of its high price-to-earnings ratio, others believe it has good growth and earnings prospects. Dan Ives is one of them. Since 2018, Daniel Ives has been a managing director and senior equity research analyst at Wedbush Securities, focusing on the technology sector. Dan has been covering software and the larger technology sector on Wall Street for almost 2 decades, and as such, we deem him an expert on the subject. Ives is positive about Tesla, claiming that the spike in energy prices caused by the Ukraine conflict, among other factors, would be a significant stimulus for the company and will lead to increased EV adoption in Europe. He feels it's also a solid position in terms of manufacturing and has remarked that Tesla is in the lead for the electric vehicle race. Timing is crucial in the stock market. When looking for stocks to purchase, it's critical to conduct fundamental and technical research that reveals lower risk entry points with high potential rewards. So, is Tesla stock a good investment? In technical terms, Tesla is going up the right side of a cup base with a buy point of $1,208.10. The stock's 50-day moving average has been reclaimed. However, the relative strength line is still a long way from its previous highs. In simple terms, the stock is back up, but it seems to be going even higher, so it has good potential. Despite its rapid development, over-oriented investors are naturally apprehensive of Tesla, which has a market valuation of $1 trillion. However, the stock has so far defied typical valuation criteria. The main question is whether it will be able to do so in the future. While no one can definitively answer that question, we're inclined to say yes. Other variables, apart from high margins and scale, could help Tesla's valuation in the future. The automaker's full self-driving feature, battery technology, new factory openings, and most recently, the pending stock split are also possible factors. Tesla appears to provide investors with a steady stream of news, but a recent Securities Exchange Commission filing caught many off guard. The corporation is preparing for another stock split less than 2 years after announcing a 5-for-1 stock split. As stated by the filing, the company intends to seek shareholders' approval for a share increase to permit a stock split of the company's common stock in the form of a stock dividend. According to Wedbush analyst Dan Ives, Tesla's planned stock split is a show of strength by the electric vehicle producer that will likely motivate investors to buy more stocks. Stock splits generally have no effect on the company's valuation or underlying operation. They can nevertheless be an indication of management's confidence. In many cases, this translates to stock gains. So why purchase Tesla stock now? Tesla is planning its second stock split, which will allow it to begin paying dividends to shareholders, as we mentioned earlier in this video. Tesla stock has more than doubled since its previous 5-for-1 split, which is particularly important from an investment standpoint. As a result, there's a lot of pressure on Tesla shareholders to support the split, especially given how effective it was for the company's valuation the last time around. It's important to note that if you believe Tesla shareholders will support the split, you should buy shares before the official announcement. This will allow you to purchase Tesla stock at significantly lower costs before the broader market reacts. Ives believes that regardless of whether or not another split is announced, there are even more reasons to buy the stock now. He said, "You shouldn't buy shares just because of the split. You should buy because you believe that the company will go in the direction you expect." The future seems to be bright for Tesla, and experts see the stock soaring as the electric vehicle brand dominates the industry, which is exactly the direction investors are hoping for. According to experts, one of the critical factors to analyze before buying Tesla shares is the company's vehicle delivery numbers. This essentially means considering two main figures: the number of vehicle orders Tesla receives from customers and the rate at which the company can meet this demand. Tesla has significantly increased its manufacturing capability, and over the next 10 years, Musk hopes to produce 20 million electric automobiles. This is more than double the current output of other automotive giants. As a result, it's on a quest to significantly increase its production capacity. Now that Tesla is producing cars in Germany, it will compete in the electric vehicle market with three well-known German brands: Volkswagen Group, BMW, and Daimler AG's Mercedes-Benz division. In addition, Tesla is becoming increasingly profitable. In 2021, the company's total revenue surpassed $50 billion, and it earned nearly $5.5 billion in net income. It's also not difficult to see how the corporation made that profit. Over the previous 3 years, Tesla has steadily increased its gross margin. There's also no escaping the fact that at some time in the future, more people will be driving electric vehicles than traditional gasoline-powered automobiles. Many governments, particularly in Europe, have already announced that new petrol and diesel automobile sales will be prohibited by 2030. This, of course, will open the way for electric car makers such as Tesla. As a result, demand for electric vehicles is already increasing at breakneck pace. Experts believe it's the best jump into the foray, now that things are still picking up. Many believe that another reason to consider buying Tesla stock now is that the electric vehicle manufacturer continues to beat its competitors. For example, fellow electric vehicle company NIO, based in China, has lost 40% of its value in the past year, compared to 78% for Tesla. Then there's Rivian, a US-based electric vehicle stock that has lost 64% of its value since its November 2021 IPO. It's also worth considering that conventional automakers like Ford and General Motors are both substantially investing in the expansion of their electric vehicle divisions. Financial expert Dan Ives seems unfazed by this. He said, "Right now, at least in EV land, it's truly Tesla's universe, and everyone else is paying rent." The key concern that investors who are still on the fence about Tesla seem to have is the company's value. Tesla bears make this case for a variety of reasons. First and foremost, it's unclear how Tesla would reach market capitalization when its first full-year profit was only recorded in early 2021. Tesla had been losing money for the previous 13 years. Furthermore, while the price-to-earnings alone cannot indicate whether Tesla is likely overvalued, it cannot be overlooked. Tesla has an extraordinary price-to-earnings ratio of 222 times right now. The easiest method to compare a company's price-to-earnings ratio is to look at both the broader market and its primary competitors. The combination of robust demand and Tesla's dominant market position should help the company's profitability continue to increase, though. Tesla has the ability to set its own prices. While many businesses are grappling with the rising raw material and transportation costs, Tesla has already announced price increases in the United States and China. In fact, it has raised the prices of several vehicles twice in the last month. Whether or not the company receives approval to increase its share count, there are plenty of positive developments underway. While another stock split may boost shares in the near term, long-term results will be determined by the business itself. Tesla will take advantage of increased worldwide demand by ramping up production at its 2 new facilities. Whether it splits the stock or not, it is shown to be extremely profitable. And that is what investors should focus on at the moment. So, do you agree with Dan Ives? Is now the best time to buy Tesla stock? Leave a comment down below.